As the global economic landscape shifts and new alliances form, Southeast Asian nations find themselves at a crossroads of opportunity and challenge. With BRICS gaining more influence around the world, the existing order in Southeast Asia faces potential disruption. In this evolving context, Malaysia has set its sights on becoming the region's financial hub. But can this ambitious goal be achieved? This video explores the possibilities and pitfalls of Malaysia's aspirations, drawing on insights from various sources listed in the description below. Southeast Asia has long been a region of dynamic growth and economic potential. From the bustling streets of Bangkok to the gleaming skyscrapers of Singapore, the region has witnessed remarkable development over the past decades. However, the rise of BRICS, Brazil, Russia, India, China, and South Africa, and its expanding influence is reshaping global economic dynamics, prompting Southeast Asian nations to reassess their positions and strategies. The BRICS alliance, which has recently expanded to include new members, represents a significant portion of the world's population and economic output. As Sarang Shador, director of the Quincy Institute's Global South program notes, Southeast Asia's presence in BRICS strengthens the collective voice on reform of the international system. This growing influence has not gone unnoticed in Southeast Asia, with several countries, including Malaysia and Thailand, expressing interest in joining the bloc. Before we delve deeper into Malaysia's potential as a financial hub, we'd like to remind our viewers that all sources referenced in this video are included in the description below. If you find this analysis helpful, please consider liking and subscribing to support more content like this. The interest in BRICS among Southeast Asian nations reflects a broader trend of hedging and seeking alternatives to the Western-dominated global order. As tensions between great powers heighten, countries in the region are looking for ways to diversify their economic and strategic partnerships. This shift could potentially shake up the existing order in Southeast Asia, creating new opportunities and challenges for regional players. Malaysia, in particular, has been vocal about its ambitions. Prime Minister Anwar Ibrahim has spoken about the potential of BRICS, stating that China's rise had brought us a glimmer of hope that there are checks and balances in the world. This sentiment reflects a growing desire among Southeast Asian nations to have more say in global economic affairs and to reduce their dependence on traditional Western-led institutions. However, the path to becoming a financial hub is not without obstacles. Singapore has long held the crown as Southeast Asia's financial center, boasting a robust regulatory environment, political stability, and a highly skilled workforce. To challenge this dominance, Malaysia would need to significantly enhance its financial infrastructure, regulatory framework, and overall business environment. One of Malaysia's key advantages is its strategic location and diverse economy. The country has a well-developed Islamic finance sector, which could serve as a unique selling point in attracting investment from Muslim-majority countries. Additionally, Malaysia's relatively lower cost of living compared to Singapore could make it an attractive alternative for international firms looking to establish a presence in the region. Yet, challenges remain. Political instability has been a concern in recent years, with frequent changes in government potentially deterring long-term investors. Furthermore, Malaysia would need to address issues related to transparency and governance to build trust in its financial systems. The competition for financial dominance in Southeast Asia is not limited to Malaysia and Singapore. Thailand, Indonesia, and Vietnam are also vying for a larger slice of the economic pie. Each country brings its own strengths to the table, from Thailand's growing startup ecosystem to Indonesia's vast domestic market. As BRICS expands its influence, it could potentially offer new avenues for economic cooperation and development in Southeast Asia. The BRICS New Development Bank, for instance, could provide an alternative source of funding for infrastructure projects in the region. This could be particularly appealing to countries like Malaysia, which are looking to boost their economic growth through large-scale development initiatives. However, as Chen Changwei and Nikola Stojanovic point out in their analysis of BRICS partnerships, why have some bilateral relations between China and individual C countries been upgraded to a level of either strategic partnership or a comprehensive strategic partnership, while China's partnership diplomacy has not been extended to the rest of the 17 countries? This observation raises questions about the selective nature of BRICS partnerships and how Southeast Asian nations, including Malaysia, might fit into this evolving landscape. The viability of Malaysia becoming a major financial hub depends on several factors. The country would need to significantly enhance its regulatory environment, invest in cutting-edge financial technology, and attract top-tier talent. It would also need to navigate the complex geopolitical landscape, balancing its relationships with both Western powers and the rising influence of China and the BRICS alliance. Malaysia's membership in ASEAN, Association of Southeast Asian Nations, could play a crucial role in its aspirations. As the Council on Foreign Relations notes, ASEAN has played a central role in Asian economic integration, joining negotiations to form the world's largest free trade agreement and signing 6 free trade deals with other economies in the region. Leveraging this regional cooperation could provide Malaysia with a solid foundation for expanding its financial influence. However, ASEAN itself faces challenges in presenting a unified front, particularly on issues related to China's growing influence in the region. Malaysia, like other ASEAN members, will need to carefully balance its national interests with regional cooperation and its relationships with major powers. In conclusion, while Malaysia's ambition to become Southeast Asia's financial hub is admirable, it faces significant challenges. The changing global economic landscape, influenced by the rise of BRICS and shifting power dynamics, presents both opportunities and obstacles. Malaysia's success will depend on its ability to leverage its strengths, address its weaknesses, and navigate the complex web of regional and global relationships. As Southeast Asia continues to grow in importance on the world stage, the competition for economic dominance within the region is likely to intensify. Whether Malaysia can emerge as a financial powerhouse remains to be seen, but its efforts to position itself in this evolving landscape will undoubtedly shape the future of Southeast Asian economics and politics. The journey towards becoming a financial hub is a marathon, not a sprint. It requires sustained effort, strategic planning, and the ability to adapt to rapidly changing global conditions. As Malaysia pursues this ambitious goal, it will need to remain agile, innovative, and committed to creating an environment that attracts and nurtures financial talent and investment. The tiger may yet roar, but only time will tell if its voice will echo across the financial capitals of Southeast Asia and beyond.